Welcome to Bears in Exile. Today is Wednesday, February the 27th, and this is a quick hit on the indexes. So tonight is fascinating, in my opinion. We had, of course, a really strong day. Dow up 175 points. A really insane follow-up to yesterday's very strong day. And, you can look at this and say, it's all over for the Bears. The Bears are finished. And certainly, with the strength that was displayed today, you could make a case for that easily. The Dow making new multi-year highs. Very, very powerful. Beyond that, what do we have? Well, we were way down here on the CCI. I didn't like that when we were dropping, and now it has shot way back up to the other extreme. To me, that is something of a warning sign. We do have a minor blip in the heat map once again after having worked it off. Now it is coming back. This is very early, though. Can't stress that enough, but there is something there. We have the secondary reset underway. MACD histogram going up, MACD up, RSI up, stochastics up, and the CCI up. Very nice. 14-day RSI moving average is still moving down. The overall trend is still down at the moment, the intermediate trend, that is. So, are we up high enough that it can turn around? Well, yes. Of course, the CCI itself, but the RSI above the neutral line once again. This hasn't turned all out bullish yet. It certainly could, but not yet. And what else is there to say about this? I mean, it backed off of the upper Bollinger Band slightly. It's a nice looking chart in the daily time frame. That's all there is to it. But if we move right along, we're going to go to SPX. And notice how these are different. SPX did not make new multi-year highs. It didn't even break the previous high that we have. It did break the midpoint of the big red candle, which is positive. It did close slightly above, very slightly above the big red candle, which is also positive. Bringing back, once again, the little blip, just like on the Dow. Everything else on the Dow is identical, no need to rehash. And notice that this looks different. The Dow came down, barely kissed the long-term moving average bar, and it bounced off of it. SPX came down, went halfway into it, almost got to the second to the last moving average, like I was hoping it would. It didn't quite do it, and is now bouncing. And what can we infer about that? Well, SPX is not as strong as the Dow, evidently. And more importantly, if we look at TNA, it's very interesting. Notice the difference once again. TNA not making a new recent high, not breaking a previous high, not closing above the midpoint of the big red candle. It did pierce, but it did not close above it. And this one is different as well. Also notice that the rebound on this is not nearly as nice as the Dow, and we are starting to get a little tiny bit of a inkling in the heat map as well. So, from really good to not as good to really not as good. And the really not as good should be the one in the lead. At the very least, you would want SPX to be the one at the top. But no, it's the Dow. So, do I entirely trust this move up? No, I do not. No, I do not. If it was this one, sure I would. But it's not. And going on to the VIX. Where are you, VIX? Here you are. Now, this one is utterly disappointing. I'm not mad about it because it introduces a better opportunity, but you were saying last night it normally is not a 1 or 2 day affair to get above the 200-day moving average, and Did we break it properly by going through it? No, we gapped down and then headed down the entire day for the most part. Um, Notice the long-term moving average bar is just about gone, and we closed right at the top of it, almost above it, but not quite. We still have the 14-day RSI moving average moving on up. We have a very minor secondary reset underway. Well, minor because it hasn't gone that far yet. But we also now have a distinct blip in the heat map for a potential bottoming area. Very interesting. That does go hand in hand with the blip on the Dow and SPX and TNA, although it is much more evident here. So what does that tell me? Well, we haven't cleared the big green candle yet. So potentially, possibly, this could be a bull flag. Yeah, that's a big stretch, but technically it could be until it gets below it. And it didn't quite get to the upper price consensus level today either. It came really close, but didn't do it. So as far as the regular indexes have gone up and this one has gone down, it makes me question if it has been too much too fast. So I am looking for a bit of a down in the overall market tomorrow and a little bit up in volatility as well. Tomorrow is also the eve of sequester, so very interesting. The NDEs this week have not been kind to the bears. It was good Monday and not a good Tuesday or Wednesday. So at the mercy of the NDEs, and I'm going to look at the internal structure of volume really fast just to see if there's something special, if I can find it. And here we are with SPY. Wrong one. Ah, here we are, SPY. Well, this is kind of a mixed bag, but not in an overly bad way. And you'll notice too that there are some differences in between SPY and SPX. SPX just barely above the big red candle. SPY did not do it, did not close above at all, didn't pierce, didn't anything. So that's nice. Bad thing is the accumulation distribution, which had its first downtick yesterday. It ticked back up today. It is still in a area where it's going to run out of space. We are getting a cross on the volume price trend today. First day. Even with this, first day. And we already had 2 reds, so today makes 3 reds. All of them are the minors on SPY. And we crossed for a green on the unbalanced volume. Not a good sign, but it is what it is. So 3 reds, 2 greens, and if we get a whipsaw on the unbalanced volume tomorrow or Friday, that would be very ugly. If we look at the 60-minute time frame, I do believe it's pretty cool looking. Because it's really easy to see this. So you could run out of room very quickly. We already have some tails up here indicating some weakness. And what else do we see? Well, the volume actually doesn't look bad at this moment, but I mean that was carried through all of today. This only takes less than a day to turn, so I guess we'll see if anything happens with this trend line here. And you could look at this and say, well, if you want to be really, really bullish, you have the start of what could be an inverse head and shoulders. I would like to see this go down and then go back up, and maybe that will be a really good pattern, but that would require it to come down here. It would have to get lower than this point right here. It would have to come down to 149.5 roundabout, and that would be really, really nice. But I guess we'll see. And also looking at TNA, should do that. I don't think there's going to be any difference, but yeah, just for fun. Yeah, it looks pretty much the same, except we don't have whipsaw on the unbalanced volume. It didn't cross at any point yet. But anyways, I guess there's not as much to see here in regards to volume as I would have hoped. But there it is. We will see what tomorrow brings. And certainly the NDE of the sequester should be around. Just hasn't been around yet. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.